Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. Today, we had a huge announcement from Merck. The ticker is MRK if you've never heard of them. They're a huge company, $200 billion major pharmaceutical company, and they had a major news announcement saying effectively they could be the first oral treatment for COVID. This could be a revolutionary treatment for COVID. And let's dive into what could this mean for the stock, for shareholders. I actually look at this and I'm thinking, wow, even though the stock popped about 8% today, it's still actually not that expensive of a company. So let's dive into what the news was, how much this, could potentially impact their business. What do I think about the valuation, all that sort of stuff, diving into what does their business actually look like beyond just this potential oral treatment for COVID. And so as we look at this, today it was huge news. This came out October 1st, effectively saying that their treatment, if authorized, and keep in mind, Merck does plan to seek emergency use authorization in the U.S. as soon as possible, and then, worldwide as well. If this ultimately gets authorized, you're talking about a treatment that will be the first oral antiviral medicine for COVID-19. So this is really exciting news. The reason why it's so exciting is because based on the data they've seen so far, saying effectively 7.3% of the patients who received the treatment were hospitalized through day 29 compared to 14.1% that had the placebo. So that's about a 50% reduction in terms of the folks that are hospitalized that try this oral treatment versus the placebo. And critically, this last line here really got me is through day 29, no deaths were reported in patients who received the treatment molnupiravir as compared to 8 patients or 8 deaths in the patients who received the placebo. And so you can see the figures. About 28 out of 385 were the ones that received the treatment, and 53 out of 377 were the folks with placebo. So that does seem like quite compelling and interesting evidence. Now, the stock did pop today about 8-9%, a little bit after hours as well. And so folks are wondering, could it still be cheap at this $200 billion plus market cap? And so one should first take a step back, like, okay, well, let's see what they were saying pre this news. What did they think this business looked like pre? And, you're talking about a business that's growing, low teens rate. This is a mid 40s billion dollar revenue company versus this $200 billion valuation. So, you're talking about around 5 times revenue. You can see that they're guiding to GAAP earnings or non-GAAP adjusted earnings. So trying to say, hey, let's remove all sort of one-time expenses or one-off weird things and say, hey, our non-GAAP EPS is around $5.50. That's versus their $81 share price. So, I'm looking at this. This was their guidance as of the second quarter 21. This was, before today's wonderful news. So there's possibly even more earnings potential as this potential treatment for COVID gets, rolled into here. Now, the question is how much of an impact could it have relative to their, nearly $50 billion revenue business? That said, looking at their earnings, it implies even after this bump that it is trading at a mid-teens earnings multiple, around 14, 15 times adjusted earnings for a company that's growing 10% plus. Currently they're guiding to 10 to 12%, excluding foreign currency changes. So that, that does strike me as kind of interesting. I mean, this is not the hyper expensive part of the market that you see over and over again. And honestly, management's planning to return half of their adjusted earnings as dividends. And so they're guiding to about $2.60 in dividends for 2021. I'm generally not a huge fan of dividends. I'd prefer buybacks because of the tax efficiency. I could do a whole separate video about that. But look, $260 on an $80 stock, you're looking at a 3% plus yield. So that is certainly more compelling than, let's say, a U.S. government with 2%, and who knows whether or not they'll actually pay their bills in a few weeks. That is just lunacy. I'll do a whole separate other video on the complete madness and honestly shame of the U.S. Congress, what's going on right now. Shame on them. And then trying to understand what's going on with Merck, like to sort of, okay, how do you value this business? How do you think about what this business could be like? Because it's one thing to look at what their earnings, could be in the year ahead versus what do they actually do. And the way to understand it is it's really 3 different baskets. And even then, I'm only covering like 70-80% of the business when I look at these 3 baskets. It's oncology, vaccines, and animal health. Those are the 3 baskets. And, if you look at the oncology business, Keytruda is an immunotherapy. It's a revolutionary treatment. It's prescribed for over a dozen different cancers and represents nearly 40% of Merck's business. So this is their key cancer treatment. The critical part here is that it does go off patent in 2028. So that is sort of a big red flag that investors do know about. It's been well telegraphed. That said, a lot of folks have called Keytruda, like a revolutionary treatment. For some types of cancers where chemo doesn't work on the first line, they've actually used Keytruda. So this is exciting stuff that's going on. Keep in mind, I don't own any shares in Merck at the time of this video. I'm still sort of sizing up based on this, incredible news. I'll talk more about my own personal journey and what I consider for Merck towards the end of this video. And so then next is, so we talked about their oncology segment, with Keytruda being the key aspect. Next is vaccines. Vaccines represent about 20% of Merck's business. I'm doing this all based on their top line or their revenue. With Gardasil, their vaccine for HPV, the bulk of this business. So the vaccine. Now, what's neat about vaccines is that they're generally a nice and stable business and less susceptible to patent cliffs, like what I mentioned with Keytruda. Generally, with patent cliffs, what you see is, they're able to command just incredible pricing and then raise prices year after year after year. But then once you hit that patent cliff, you see this huge deflation in your revenue from those previously on patent treatments. So Keytruda, could drop. A patent treatment going to generic where a bunch of players look to compete can literally lose 80%, 90% of its revenue over time just because they're generics that are so much cheaper. So that becomes the concern of like, well, wait a second, this is 40% of the business now, and 2028 later, in a decade, later this decade, you will start facing that pressure. Now, looking at vaccines, I'm saying, look, this is actually a stable, nice business. Partly because there's significant barriers to entry as new vaccines need to prove the efficacy, effectively saying this is better than the incumbents. It's in excess of the current, vaccine coverage that's in the marketplace. And so you generally don't see like hyper competition in this space relative to major on-patent treatments like you'll expect to see with Keytruda. The third key core segment, I'd say, with Merck, MRK stock, is their animal health segment. That's about 13% of their business is split between livestock care and companion animals. Livestock slightly bigger. Generally this comes down to with livestock, folks need to keep their animals, alive and well, try to prevent, flus from wiping these groups out. And, people love their companion animals. You have a couple of cats and dogs running around. People say, hey, I love this cat. I love this dog. I just, I can't bear to see anything happening to it. And the reality is these vaccines are much like Ben Franklin's, saying, an ounce of prevention is worth a pound of cure. It's very similar, as you look at this. Now, the key challenge here as you're looking at Merck is that here it is. You can see it's sort of very small, but this shows everything in their pipeline. They have a lot of stuff that they're working on that's in phase 2, phase 3 under regulatory review. And the challenge with this is always, will this new pipeline of new treatments offset the expiring patents in the decade ahead? And that's a big question mark. I don't have, good answers for you. I think this is a really hard task to get an answer to. So what are my personal thoughts? Let me do a quick plug real quick where, if this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. This is a no-hype, mission-focused channel. I'm looking for potential multi-baggers, types of stocks that could potentially go up hundreds or even thousands of percent over time. If you want to follow my personal journey, go to unrivaledinvesting.com where I try to call out potential multi-baggers. I call out at least one potential multi-bagger by the end of the month, and my full portfolio during the first week of the month. And we also have this online community on Discord where I'm interacting on a daily basis. So that's for the folks interested in learning more. Go to unrivaledinvesting.com. So let's go back into sort of thinking about how am I considering this business? How am I considering Merck, whether or not it's going to be part of my personal journey and what have you? So I look at Merck and I'm saying, wow, like first, this is just wonderful news that came out today. I'm grateful that there are businesses like Merck that are making these investments to grow, to have key treatments. And honestly, I'm glad that they are well compensated when they do find a hit, when they are able to find a treatment that changes people's lives, saves people's lives. Like just think about if you're able to have a shelf-steady oral treatment for COVID, that would be a game changer just in terms of the logistics versus the current vaccines. And believe me, I'm big. I've got, I'm double vax, I'm a big fan. But just think of the logistics of how easy it would be to roll it out, worldwide if you have, if you have a shelf-stable pill that you can send. So I think that's very exciting. That's at least being considered right now and could be rolled out in the future. From an investment perspective, how do I think about this? I'm considering this as a very stable grower, at least for the next, for the better part of this next decade. You do have the Keytruda sort of risk that's hanging over you. And so because of that, I don't think you're ever going to get a crazy multiple. I don't think you're ever going to get, let's say, like 30 times earnings for this business, because there's always that aspect of like, well, wait a second, this 40% of my business, this is going to disappear someday. And that's a key component of your earnings. Now, that said, you are getting this sort of nice return on capital, 3% currently. So that might attract enough investors to sort of say, hey, will they have enough hits between now and then to offset Keytruda in the years ahead with potential growth? So I'm looking at this. I think it's interesting. It's not really dirt cheap for my taste. I personally have a preference. I sort of have a range of how I look at things. I either want, a company that's really, really stable, maybe low single digits, teens growth, slower growth. If I'm looking at something like that, then I think I want a company that trades at a really reasonable multiple. If it's growing at 15 to 20%, then I might, want a 15 to 20 times multiple. But if it's growing at only like 5 to 10%, I might want, a really cheap multiple and know that management's going to be returning those cash flows to me. I called out a company like that in last month's potential multi-bagger that's trading at like 8-9 times free cash flow. And so I know like, oh, okay, and you're going to be returning that cash to shareholders. I know that the value of this business, if it's just stable, is going to compound at 6-7% a year for me, plus whatever additional growth you get, plus potential multiple expansion. So that's how I like to see on the lower growth things. On the higher growth things, then it's like, hey, it's growing at 100% this year. How long do you have this high duration growth? And that is like the $1 billion question for a lot of these companies is like, could you have, if it's 100% this year, could you do 90% next year? Or is it could be closer to 50%? That delta is where a lot of value comes in for a lot of these companies. And honestly, it's very hard to get a view for that. Now, regular viewers know that this is unrivaled investing. So I'm looking for companies that are unrivaled. So hopefully it makes it easier for them to put up that growth longer term. So I think when I'm looking at Merck, it doesn't really fit that profile for me, especially because you do have that sort of patent overhang in a decade from now. That said, when I think about the hedge fund community, and previously I personally worked at a multi-billion-dollar hedge fund, so I think I sort of have an insight here in terms of how other hedge funds might be considering, sitting at the global poker table. I think this news does result in Merck probably catching a bid for some time. And yeah, it did bump up 8-9% today. But generally the way stocks work is you get favorable news and then it's sort of processed over the next quarter. And then you get the next quarter's earnings and then it sort of gets processed over that. So you sort of see how it trends. And so that I'm looking at this and I think, putting up strong results. Management seems to be doing very prudent things, like they just divested, they spun off some of their, effectively their generic assets, focusing on their patent treatments. And so I think, investors, I could see hedge funds around the world, institutions around the world getting around Merck right now and saying, hey, with this news, with this reasonable valuation, with this 3% yield, I could see investors getting around and buying to it. Just not part of my personal journey. If you want to see what's going on with my journey and, the past potential multi-baggers, 2 months ago calling out company growing over 100%, that's also in the healthcare industry, go to unrivaledinvesting.com. And so I hope this video talking about Merck has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching.